Hey everybody, this is Jim at SP500chart.com. It is April 12th, 2013, and today gold really seems to have made a technically significant move to the downside, and I want to, using GLD as our proxy for gold, we're going to take a look at that chart. Before we do so, I want to remind you that the SP500chart.com website, which, by the way, you need to go and check it out, and I'm going to tell you why in the middle of this video. But the website and the video are for educational purposes only, and nothing stated at the site or in the video is intended to be used as investment advice. Look, I can draw lines on charts. Matter of fact, I can do it all day long. But you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I'm not a licensed financial professional, but I am a guy who loves to draw lines on charts. So let's take a look. When you're looking at gold, it makes sense to look at the long-term chart. And I've been charting gold for a while, have made some really good calls, and here lately I made a call that did not work out well, but thankfully I got stopped out about $6 in GLD above where this sits right now. But let's take a look. First thing I want to show you, gold. The gold chart is marked by some long-term trend lines that are interesting because they're we see them in this broadening channel. You don't see that a whole bunch. It's very typical to see a rising channel that might get a little bit narrower as we get to the top. But in the case of gold, we've got 1, 2, 3 well-defined solid touches on this top line for about 3 years. Gold was also inside of this very well-behaved and easy to anticipate rising channel between these blue lines. Gold had a nice consolidation triangle back here in the 2006-2007 that led to a breakout. That breakout led to a very typical pullback to right at about that breakout or apex level of that triangle. So far, everything is just going along as one would expect. There was a nicely formed inverted head and shoulders pattern in 2008 and 2009 that created, by the way, I am going to toot my horn here. Back in 2009, everybody was saying, watch out for the double top in gold. And I was saying, watch out because gold is going to go to 1,500. And why did I say that? Well, because we had an inverted head and shoulders pattern right here. The clue to this, by the way, if you see this little trend line right here, the clue was when gold made it over that little gray line. Let me zoom into that just a little bit. There's that gray line. The clue was when gold got over that line. That was the significant move that said this is going to end up being an inverted head and shoulders pattern. The target was, well, actually, let me remeasure the target. Target at the time was more like 1,400 in GLD, but that would have been a little bit higher in the actual metal. But anyway, make a long story short, today we saw what appeared to be an important line of support. And we saw two things break today. Let's zoom into this area. Here is a line that had been giving gold good and a what looked to be pretty solid reason for support right around the 1495-ish area, and that clearly broke down today. The other thing that happened is there was this trend line right here over these two tops, and it looked like this move in late August, very early September, up to the 1700s again. It looked like that would come back for a back test on this line, and there we would get a bounce, and that's where I went long. However, I did stop out because at the time it looked to me like gold should not get under about let me backtrack. Let's not talk about gold, let's talk about GLD, because that's what the chart is. It looked to me like GLD should not trade lower than 149, and if it did, then things were likely to start to come unglued, and indeed that is what happened. So right now, if we look at this chart in the typical fashion, there's two ways we could look at this. We could look at this as if the actual trading pattern here is something of a rectangle, or call it a triple top, and we call what happened over here in the fall of 2011, we just say that was a little bit of trading that was somewhat out of bounds. And let's just do that for the heck of it, because really what we've seen for the past more than a year and a half has been trading that's been constrained between in GLD about 174 and roughly 150. So if we measure this height of this pattern and we look at where we broke down today, that means we should be looking for a minimum downside target in gold of about 127 and change. What that also means is that if we get that 127 and change, this rising support line, we'll look at it again, this rising support line will also get taken out. So I guess a good way of considering this going forward is perhaps this line will provide support that would overcome the built-in overhead of selling pressure that has built up over the past 2 years as gold has been consistently, well, almost not quite 2 years, about 23 months, as gold has been consistently over, or GLD has been consistently over this 150 level. Normally, you would look at this technical bit of information and you would say, then whatever the height of this overhead is, we would expect a move at least down to 127 and change. If that move is swift, it may get held up by this rising line. But you know, I've sort of learned to trust these patterns. This looked like it could have been a consolidation pattern, and it looked like we could have been setting up a nice move off of that 150-ish area. But with today's move down underneath 144, that is a clearly technically significant break of 150 in GLD. So there's almost certainly going to be more downside to the gold market. So I would just exercise caution, and at some point in time gold's going to be a buy again. But if we're looking at a long-term trend that is at risk of being broken, then I think we need to be careful. And right now, I'm going to steer clear of gold and GLD, and just let's see what happens over the next months and possibly even years ahead, where we may end up making a nice reversal pattern that tells us, hey, it's time to go long in gold again. Right now, I don't think it's the time. Now you probably will get an eventual pullback, by the way. There will likely be a pullback to this 150 level, but whenever that happens, if you're trapped in gold, that's probably a good point to get out, especially if gold has come nowhere near to making that minimum expected target down around in GLD down around 127. So guys, that's it. Gold made a technically significant move today. So buyer beware. Just keep watching the chart. So you may be saying to yourself, why did this guy do this gold video and offer this up on YouTube? Well, it's very simple, because I want you to come by sp500chart.com and check out my videos. I do a daily technical analysis video that looks at each day's trading action in the S&P 500, and it's a subscription service. Come check it out. I'll give you a hint. If you can afford to buy me a half a cup of decent coffee every day, you can get that video made available to you. $19.95 a month. Check it out. Thanks for watching.